If you've been thinking about selling your home, you've probably heard a lot about rising interest rates. But how do they really affect your sales price? Let's break it down in simple terms. Interest rates can have a direct impact for how much the buyer can afford, so that impacts your sales price. When rates are low, buyers can borrow more money for that same monthly payment, which means they're often willing to pay higher prices. But when rates rise, their buying power drops, and that can lead to fewer offers or longer days on the market. So if you're thinking about selling your home soon and want to know how interest rates are impacting your neighborhood, all my contact information is below. Here's an example. Let's say a buyer has a budget that allows for a $5,000 monthly mortgage payment. When interest rates are at 4%, that might mean they can afford a $1 million home. But if rates jump to 7%, that same $5,000 only buys around an $800,000 home. So even though their budget hasn't changed, the price range they could shop in has significantly dropped. For sellers, this shift impacts both demand and pricing strategy. When rates are higher, there are fewer buyers competing for the same homes, which can lead to smaller bidding pools and slower sales. On the flip side, when rates start to come down, more buyers re-enter the market, increasing competition and often pushing prices back up. Timing your sale around these trends can make a big difference in your outcome. But here's the good news. The South Florida market is still strong. Because of our weather, lifestyle, and steady flow of out-of-state buyers, demand remains high even during rate fluctuations. Cash buyers in particular are still active, especially in the luxury market, which helps stabilize prices even when borrowing costs rise. If you're thinking of selling in a higher rate environment, strategy is key. Make sure your home stands out with top-notch presentation, professional marketing, and accurate pricing. The goal is to attract serious buyers who are ready to move regardless of interest rate shifts. Interest rates directly influence what buyers can afford, and that impacts how much your home might sell for. When rates rise, affordability drops. When rates fall, demand climbs. But in South Florida's resilient market, smart pricing and strong marketing can help you succeed in any rate environment. And that wraps up this video. If you want to know how interest rates are impacting your home's value, all of my contact information is below.